All right, let's try now. Can everybody hear me and see the screen now? I think I may have had that wrong. Ah, there we go. All right, sorry about that. And good morning to all. Hope everyone had a great weekend. First weekend of NFL back. Don't know what that noise was, but give everybody a minute or two to get on board. And good morning to you as well, everybody. Market looks like it's going to be bouncing back here. Certainly didn't look great last week, but for those that were on our late week call, we highlighted the very real possibility that markets can get a little bit of a bounce on this little, nothing else, a dead cat bounce after not only a less than stellar week, certainly a rough Friday. But you see, looking at the S&P, you can see my little 5,400 mark here. Support on the gap up, support on the pullback there, and where we ultimately ended up holding, if you look on Friday, it's kind of where we ended up holding for the last 4 hours of the day. So, seemingly confirming the importance of that line. It's very similar to the NASDAQ 100 here. Look, 4+ hours of sitting there, right? So, look over here, right where our old orange line there is, going back to the highs from earlier in the year. To be honest, wasn't quite sure that that line would hold up, but it appears to have. So, um, so no one should be surprised. Get a little bit of a bounce there. But that being said, certainly the market did not end on the bullish note in the world. So, um, wouldn't be surprised if we opened up down either. For now, I'd be looking at what do we got, about 1% or so in the pre-market here. 0.75%. I guess we've given back a little bit since I last looked. Um, I would not be buying into that at all. I don't know why anybody would. Well, I don't know. I take that back. I guess, if you think that was the low, maybe it is. But I would certainly think the more higher probability would be let this one shake itself out before you go start getting long. And again, this was our stance at the end of the week last week. Was that I need the market to give me a reason, show me a reason to get in here. So in other words, give me a reversal, give me a we broke several levels on the way down, break one on the way up. Give me a good reason here. Um, the level we were watching, talked about it last week on the calls, right? We were talking about this mark right here. And if we took it out, odds are probably going lower. So pretty straightforward. Took it out later in the day, rallied back up on Wednesday, hit the underside to come back down. Okay, so we broke this, odds are going lower. 55 seemed like an obvious spot. So tried to hold there for 3 days. Whether or not this level here matters or not, it doesn't look like we cared too much on the way down or up. So we may just go ahead and it was something in the past, maybe not so much now. So let's go get rid of that. And then now here we sit. Take this one out. I'd be thinking maybe back down here, right? So forth and so on. Pretty straightforward stuff there, to be honest. Somebody had emailed me about somebody somewhere talking about a double top. Um, jury's out. I don't know why anybody would think there's a double top right now. But then again, having been involved in this space for a while, I realize there's a lot of, let's just say, questionable technical analysis out there. You know, you get up to here, and somebody says, "Hey, watch out, double top." Really, what reason will we have to believe that there was a double top here? Could right now, still could, but I don't really think you want to get serious about those conversations unless we start getting down here, right? And even then, it'd be difficult to say for sure. Could be one big, huge sideways consolidation for all we know, right? So, we're going to get a bounce today. Maybe that was the low, right? But it's one of the things that gives us technical analysts a bad name is people that just don't really know what they're talking about. And then when something like this doesn't turn out to be a double top, then it looks like, oh yeah. So, as far as that dialogue goes, time will tell. We'll see. Maybe it turns out to be a double top. Maybe we find support right here, and that was the end of the sell-off. Maybe we come down here and then get a move back up. We have talked a little bit about seasonality the past couple weeks, specifically in election years, right? The months of September and going into October have not generally been too terribly kind. Certainly not a given. Seasonality and stuff like that obviously is never a given. It's not a guarantee. I like as analysts when they look at it, this is what is normally would happen, right? And if we do what we normally do, there's nothing special going on. So if the market does what it normally tends to do, not what it normally does, but normally tends to do, then this weakness we're seeing isn't really a surprise. So I wouldn't think that it puts the bull market in any kind of jeopardy longer term. But I am certainly opened up to the possibility that it could for sure. A lot of interesting economic recession indicators flashing. We've covered some of them in my other calls. And if they were to play themselves out as accurately as they have historically, then there's a real possibility the markets, again, that's an if, this, then that. Right. So no one's making a call here that the market has put in a bull market top. But do keep in mind, the bull market's 2 years old now. And right, so let's pan out here. Right, so nice little run. S&P putting in its low here, right about 2 years ago. And there you go. So it's been a pretty good one, I'd say. But do keep in mind, S&P and Nasdaq in particular would have peaked months ago. The NYC and Dow, NYC and Dow, of course, went on to hit, you know, higher highs here. If you look at momentum, doesn't seem to have been a strong move. Pan out to the weekly, right? We can see that certainly a weaker price move. And then go to the Dow. The Dow was able to creep up here and notch an extra closing high, but again, momentum is sketchy at best. So forgetting about the economic indicators, even when you look at price and momentum, certainly one can make the case of a reason to be a little cautious. But for now, again, we'll leave it as a bull market intact. I wouldn't look at today's bounce as anything more than, rough 4 days there, dropping from 56 and a half down to 54. So a nice 250-point drop there in a week. Most of it coming on Tuesday and Friday. Well, pretty much all of it. And I'd be looking for more to the downside. Do we bounce back up to 5,500 first? Maybe. Let's go back and look at the last correction we had, which I always kind of find it funny. Your perma bears can be kind of obnoxious, but boy, buddy, your perma bulls can be equally obnoxious. Like the mere discussion about the possibility of a correction, like, well, we're never going to correct. You sound as ridiculous as the bears that they make fun of, right? So it's those extremes on the edges. I find it comical because we don't have to look further than a year ago to see a correction. So it doesn't matter how bullish the market is. You have corrections, you have pullbacks. Okay, it's normal, it's healthy, it's part of it. No different than in bear markets, you have bear market rallies. So if we look back, the last correction we had, what was 11 or 12% or something, 4,600 down to 41, so a 500-point drop. Pretty orderly. It's already been this pullback so far has definitely seemingly been a little more volatile than this. We didn't have any days like the one we had Friday or Tuesday during this one. This was a very annoying correction, right? Because we never really took some major hits there. Speaking of volatility, VIX is pretty subdued compared to that Monday we all woke up to. Remember, even the Friday before, we saw it testing at 30, right? And then the Monday that we kind of woke up a little like, hey, ho, what's going on, right? Back here. So we're getting down to where the market was on that Friday, and quote fear definitely isn't what it was. So now that can be looked at in one of a couple ways. Some would say, oh, because there's no fear, right? This is no biggie, nothing special. Hey, that's a bullish thing. Others might say, well, since there's no fear, we're nowhere near the bottom. I think that's a much easier thing to clarify, solidify after the fact. Because well, it depends. I mean, that latter is predicated on the belief that we're going that that we're going lower and that this is a correction. So sure, if we knew that that was the case, if we knew this was a correction, or if we knew this was a bear market, then we can now look at the VIX and say, well, it's hard to see that the low would be in if volatility like this is subdued, right? If we call it, the fear gauge, if you will. And it's no different with the bullish side of that equation, right? Well, it's difficult to say that this is bullish if we are going into a correction, right? In which case, this would definitely be bearish. The fact that there isn't this huge, there hasn't been a real major spike here in volatility and such. So anyway, we could chew that fat all day, but as you can see, pretty good run up overall. And I don't think that we know seasonally this isn't the best time of year when you look at an election year, right? We looked at that. I think that we looked at that 2 weeks ago. I think on here. And so a lot of times that seasonal tendency could take us knee deep into October. That same tendency tends to see a great end of the year, right? But how many of you were trading in 2007, right? 2008. Didn't quite get that end of year in 2007 that we might have liked. All right. So, all right. So that's that. Stock wise, what are we looking at here? Let's look at some of our favorites, of course. Tesla. What's that here? Real nasty day on Friday. Kind of a bit of a surprise there. With the exception of earnings drop, we've only seen Tesla have a day like that once. And that was, I want to say there was a news driven event back here. So even this was news driven, but even without that, it's a heck of a day, falling from 230 down to 210. So it's going to pop back up. Right, it's going to come back up to our little 214, get above it. I think ultimately you have to decide what you think about the market, right? I think you have to decide if you think the market's going to go lower. If you believe the market's going to go lower, which I think overall it will, I think we take at least another leg down until the market tells me otherwise. That's what I'm going to go with. What the market has recently told me. Then one would think the rallies we're going to see today would be opportunities to get short. Now, if we want to gauge it based on the market, we'd love to see the S&P back up near the 5,500 mark. But yeah, pretty raunchy day there for Tesla. Nvidia. Sure looks like, so right, this was the old high, right? Around 97 and some change. Kind of see that little bounce there. This was the Monday, whatever you want to call that day. So it's hard to figure that one out. But it sure looks like this 97-ish might be where we're trying to get to. I would say if the stock could close back above 110, then I think there could be room for a little bit of a counter trend play higher. Sticking with this space, our buddy SMCI. after that nasty little news week 2 weeks ago. Drip, drip, drip. Finally took out 400. Many of you may recall back when we finally broke 700, our call was that sure looks like there's a great case to be made for coming back to this old breakout point. And we are almost there. So keep an eye on this number. Okay, this one's not up a whole lot in the pre-market compared to some others. So um, I would think this 355 area would be a number to watch. Now, would I go long there? Maybe not. Again, it's always a matter of what do we think about the market. Wanting to short that Tesla front stock. Well, you might have an opportunity here. We were actually short this in our coaching program. I would love to say we got that entire drop, but it didn't really. We make trading decisions based on what we know, not what we hope, right? And we know that how Tesla moves. This is not how Tesla moves, so to speak, right? So if we look here recently, you're thinking, maybe $10, $15 tops, and so but we played both sides of this thing, and the quick easy couple bucks on Friday. We played it. We put it on Thursday, but again, I'd like to say we rode our way down. Now, what I'm going to do is go onto my Twitter account and claim that I made this trade, because apparently you're allowed to do that and claim whatever you want. But uh, here with friends and family, we'll be honest. Snicker, snicker, wink, wink. And again, same thing with the market, right? I mean, we're looking at the market, and even though we'd had a rough Tuesday, you look at the previous 2 days, right? Are we expecting that kind of drop that we got? Maybe not. We also want to be obviously fully aware of the situation, right? We're putting on a trade that's just a Friday, right? So we want to make our decisions based on what has normally been happening, not what was so far kind of a only twice in the past month, right? Since we put in this low, we've only had a day like this twice, right there on Tuesday and then back here. And even this, we had to gap higher to do it, right? So we really only had one other day. So do we want to make our trading decisions based on, this one time that it happened in the last month, right? Or do we want to make it based on all the other days, especially when you're talking about going into a Friday? So, it's always probably one of the most toxic, cancerous trading mindsets you can have is Monday morning quarterbacking. Yeah, you betcha, man. If I knew this thing was dropping to 210 on Friday, yeah, I would have rode it all the way down. You bet. But unfortunately, I didn't know that was going to happen. So we want to, kind of play with, where the odds seem to be more in our favor. So we took our gain and moved on. Bottom line, that's nasty, right? So it's going to pop back up to 216 or so. And again, if you like the view of the market moving lower and this rally being an opportunity to get short, then of course you're going to get a better point of entry today. Do keep an eye up top here. Great level runner right across 235-ish. Hit it again, just like we did twice back here, and support over here. So if by chance, who knows, maybe the stock turns around and reverses this entire drop. Nothing about Tesla would surprise me. So, and then break through this 235, I think you have to be looking at getting long. Like I said, NVIDIA getting close. MSTR, what I had on my screen when we first started the call, kind of gave up that 120 mark, the same 120 mark that it found support here and here and here and almost again here. So it sure looks like this is a stock coming to this 100 area. Obviously, Bitcoin's going to have a lot to say about that. Bitcoin's been struggling here more often than not lately. So again, if you're looking for a short play, this can be something. Looking for a ride down to 110. Who else we watching? The stocks that we kind of, we're big fans of a lot of the bigger movers. We had a really nice trade on the ASML last week. After this failure to hold the 850 level, we had 800 puts. We exited just when we got there, so no, we weren't in for this. But it is worth noting that another level's been taken out. So we get a rally. This level sits right around 765. You can see that's where it's going to open up near that today. So if you like the sell into the rally idea, this coming up to 765 might be a great opportunity to buy some 750 or 725, 730 puts or something down there. I don't know how great this 730 level is. It was a kind of a one-time thing, but it's possible, right? I mean, I guess you could say a two-time thing. The gap lower was also at that 730. But this, I would think, is the more likely 700. So you could take a shot if you wanted to. But so we had our eyes on that. We do a lot of these bigger guys. LRCX approaching an awfully important area of support. Okay, running right through here. 725. Support already 3 different times. Resistance when we were under it. This level goes back even before this 1 year. So we're going to open up around, it's not going to open up by that much, somewhere around the 740 area. So these are ones that if you kind of look for things that look like they're going lower, right? Using the rally as a way to get like a better entry. Let's see what we got here. V is bouncing back a couple pennies. But yeah, so I'm not really, I don't have any confidence in this rally. If it holds, right? So it's why I'm a huge fan of the wow, Dr. Joe. I did not know that. That's a terrible 2-year stretch, to say the least. But okay, so I wouldn't be going long. Um, what you could do again is we do a lot of strangling and hedging, with my signal services. So hey, let's say that for example, you like that ASML, you know, and it rallies back up to this 765. You can buy puts and you can buy, say, way up here, your 800 calls or something in case there's a break back and the market does rally this week. So certainly you can protect yourself in that way, keeping in mind that, this thing, because of how it moves, if you're right on the downside, you'll get paid easily enough to cover that 800 if you did something like that. So nothing wrong with hedging yourself if you want, but I wouldn't be going all in long in this market until it gave us a reason to do that. And just to simply account the trend move wouldn't be enough for me. So I'd like to see a little bit more. But all right, so we will open here a little higher. And S&P, I think, makes it pretty clear for you. If you don't want to buy puts at all and you want to wait for in other words, you don't want to sell into this rally and you'd rather wait for further weakness, then I think not only previously, but you can see on Friday that 5,400, that's what you'd want to see break. So, all right, we'll leave it there, everybody. And as always, we'll be back next week. Smart trades, folks. I'll see you here, in about an hour or so. Prime time. I'll see you guys tomorrow. We are doing another open house coming up here in a few weeks for prime time. So prime time had an awfully good week last week. Can't remember what we made. 11. I'll break it down into points, right? So 11 options points. So in other words, if you had one contract, if you're a one contract trader, you would have made $1,100 last week. If you're a 10 contract trader, you would have made 11 grand, right? So we that way everybody can figure out what they made versus the service. Because not everybody's trading the number of contracts that I would be or the service does. So we had a pretty good week. We had a great week of the option house, of the open house. I think we made 15 or 20 points that week. So, but yeah, we should be doing another one. So keep your eyes peeled for that invite if you haven't been. If you've already been to one, I don't know, you need to come to another unless you want to. Come hang out for a week. But otherwise, Marketcast call. We'll be back next Monday. All right, everyone, have a profitable week.